Hi, this is Stacy at Madison Avenue Insurance, and I want to talk to you today about employers' practices liability. It is also referred to as EPLI coverage, and what that covers is business owners from wrongful termination or sexual harassment type claims from employees. It can also extend to third parties, which would be vendors or customers for discrimination. And so why that's important for a couple of reasons. Laws change all the time. For instance, in the city of Seattle, they just increased the minimum wage. I think it was last year or a couple of years ago. So employers that didn't pay their employees the legal minimum wage would be open to claims from their employees. The other thing I want to talk about is specific industries. So apartment owners don't typically have employees. They may have a resident manager that exchanged rent for, in term that is an employee because they're instead of paying them money, they're giving them free rent. So monies are not technically exchanging hands, but there's an arrangement there, a financial arrangement. So apartment owners have the risk of tenants filing suit for canceling their leases or not renting to them for whatever reason. And again, a lot of this stems from what the cities put into law and what tenants' rights are, which change all the time. So there may be a landlord thinking they're doing the right thing and the laws have changed and they're not aware, and now they've opened themselves up to claims. So it's really important for apartment owners. Someone that has a lot of interaction with the public, like a restaurant or coffee shop or beauty salon, would have the same risk of customers filing suit for those types of claims. These policies are on what's called claims made forms, which means the coverage, the claim has to happen while the coverage is in force during that time period. For instance, if your policy renews in January of 2019 and it goes until January of 2020 and you have this coverage in place, the claim has to be filed while that policy is in force. And so if you switch carriers and you have this coverage on your policy, it's really important to make sure that the next carrier go with will give you what's called a retroactive date, and that way they'll backdate coverage for you in case you had a claim in 2019 and now you're with a new carrier in 2020. So that's a big deal. Any kind of coverage like this that's claims made, you want to talk to your agent and make sure that carrier is going to give you the coverage that you had with your previous carrier. The last thing I want to say is promptly report anything that you think may open yourself up to one of these types of claims with your carrier, because statistics show that the shorter the time between the alleged or the incident into when it's closed and settlement is paid, the less is paid out. And how that helps you is it helps what's called loss ratio, and we could talk about insurance for days and days and days, but I'll cut to the chase. The lower your claims, the less your insurance is going to be. So hopefully this is helpful. Feel free to reach out to me if you have any questions on EPLI coverage. Have a great day.